any sort of monetary asset, as it starts to monetize, is going to attract speculators. You say, well, if this thing's always going to go up, I'll just leverage it, right? And of course, enough people do that, and it doesn't always go up anymore. It has to kind of collapse and clear a lot of that out. And unlike most technologies, people do regress. They buy Bitcoin at the top, and then they make one or two mistakes. They either get overexposed to it, and so they don't expect the risk of an 80% drawdown, sometimes more, and they put half their net worth in it, and then they get wrecked during the bear market. And then they decide, this whole Bitcoin thing, it's dead. This makes no sense. I'm out. And so they actually go, it's like going back to not having electricity. They de-adopt the technology. I think it's been healthy progress. I mean, it's the fastest asset ever to hit $1 trillion in market capitalization, which, doesn't mean as much as it would have meant 40 years ago. So, it's a little bit biased, but basically it's one of the fastest appreciating assets to go from nothing to very valuable. It's the only things that even remotely compare to it are the biggest and most successful tech companies ever. So it's been successful by any quantitative measure you can look at. I think one of the things that holds people up is the volatility. And so with most technology adoption, it's a smooth trend. So most people don't ever regress to older technology. They don't get electricity and then decide they don't want it and go back to not have electricity. And so when you look at most adoption curves, they're smooth lines up. Or sometimes they're S curves, right? But there's some sort of very smoothness to it. A monetary technology is different, especially if it's the actual unit of account, which hasn't really happened in the modern era. And the way it's necessity going to work is basically 2 steps forward, 1 step back, because any sort of monetary asset, as it starts to monetize, is going to attract speculators. You say, well, if this thing's always going to go up, I'll just leverage it. Or the alternative mistake they make is they get into Bitcoin and they say, well, this other crypto is faster or it does more. And then, so they say, well, I'm going to start diversifying into these other cryptos. And most of them collapse and then never recover. Swan, I think you did this research. Swan did research where they looked at 20,000 cryptos that are out there, and they found that only 3 of them have ever made a higher high versus Bitcoin in the next cycle. There's kind of a ambiguity about what you kind of can include as the next cycle, but there's really only been 2 or 3 or 4 of them that have kind of been able to achieve that. And they don't really achieve it the third time. And so there's been this kind of demonetization of most cryptos relative to Bitcoin. Basically, people fall into these traps. Either they get over their skis with leverage or position sizing or diversification. They get wrecked. Then they decide that this is a trap, this is a scam, this is a Ponzi scheme, which for parts of the industry is true. But for, I think Bitcoin is a very legitimate technology. I think arguably stable coins are a legitimate technology, at least for now. And so you have this kind of small number of actually utilitarian use cases and this big kind of froth built on top of it. And so I think the way that Bitcoin monetizes is necessity going to be a very kind of slow, long-term process. It's not something that happens in a decade. It's something that happens in a generation or two. There are people born now that are teenagers that Bitcoin was never not around for them. And so imagine what happens when people are 20 or 30 or 40 and Bitcoin's still here. If it's not hit by some crazy technical bug, or it's not, trapped by minor centralization or something, if it gets through various tests and challenges over the next couple decades, if it's a 30 or 40-year-old network and primary wage earners and savers have never lived in an environment that doesn't have Bitcoin, in a similar way that many young people today have never lived in an environment that didn't have the internet, it just becomes a more natural part of money. And the more widely held it gets, the closer it reaches to its total addressable market, the less explosive the upside is, so the less enticement there is to leverage it. Nobody can print it, so eventually over time, people realize if you hold rehypothecated Bitcoin or leveraged Bitcoin, you're probably going to lose your Bitcoin. And so Bitcoin is kind of a very credible way to potentially solve this over time. And people just have to be careful not to get over their skis. I've never been one to recommend 100% Bitcoin allocation. You have to kind of allocate based on your size and your conviction and your volatility tolerance. It's money that you should set aside that you're not going to need in 5 years, and that you're willing to kind of laugh at 80% drawdowns. But if you can handle that cost of entry, I think it's one of the most profound technologies of, at least of the 21st century. And so right now, the most liquid money in the world is the dollar. Bitcoin's remarkable in the sense that in a global scale, it's already one of the most liquid, especially, it doesn't have like a central jurisdiction in the way that, the Norwegian kroner does or the Egyptian pound does. But when you think, okay, what are the top 10 monies I would want to bring with me, bear assets globally? Bitcoin's not number one, but it's in the top 10, right? So it's behind dollars, euros, and a gold coin. But it's higher than like 140 fiat currency probably, where you could find an ATM or a meetup or basically most urban centers in the world is a reasonable way to get Bitcoin exchanged in the local currency or for goods and services or something. It's one of the more saleable ones. But that's a process. And so when Bitcoin was in its early days, it was rather illiquid. If the trading volume is millions of dollars worth of Bitcoin per day and you're a billionaire, or you're someone, or you're an institution that wants to allocate hundreds of millions of dollars to it, you can't. I mean, you can do it very slowly over time, but then the concern is if you ever want to sell it, you're not going to be able to sell it quickly. You have to move out of it. And so if your thesis ever changes, you're in trouble. You're not going to be able to get out quickly without moving the price. And so in any given era, Bitcoin can only absorb certain types of buyers, right? So why doesn't a sovereign bond, like a sovereign wealth fund, just YOLO into Bitcoin? And it's because there's liquidity constraints. They can only get in so quickly without moving the price. And should they ever want to tap into that liquidity, it's not nearly as liquid as dollars or gold market, for example. So they're going to have a tough time getting out of it quickly should they need to. So at any given level of adoption, there's only certain sizes of buyers that can realistically, meaningfully allocate to it. So, in 2011, Bitcoin was not ready for Michael Saylor, for example. And in this era, Bitcoin is not necessarily ready for like $1 trillion market, $1 trillion entity that wants to put $15 billion into it and be able to get that in and out quickly without thinking about it, right? So there are certain sizes that it has to reach before it can even attract certain buyers. So on one hand, that's bullish. That's part of why it can only monetize so quickly, and tells us that the question is, who's going to buy Bitcoin at $250,000 per Bitcoin? Well, central banks and sovereign wealth funds and pools of capital that right now consider it too illiquid for their massive size. That's kind of the entities that it would start to enter their radar only at that level. So on one hand, that's a bullish case. On the other hand, that is one of the realistic limitations of Bitcoin right now, is that it's not as saleable for the most part as dollars or euros or gold coins even, and because it's still a smaller, newer asset. And I think that's one of the kind of the nitpicks I would have with people who say, Bitcoin's not volatile, everything else is volatile relative to Bitcoin. It's like, well, sure, the rules aren't changing for Bitcoin, but it's Bitcoin is the less liquid, less saleable good than many other things. And the purchasing power of Bitcoin does change pretty rapidly in a short period of time compared to more liquid networks like the dollar or the gold market or the euro or even the yen. And so you have these other monies that are they're currently larger, more liquid, more stable. And I think over the long run, Bitcoin is monetizing to get to that level, but it takes time. And right now, bull markets are quite liquid, bear markets are less liquid, but this bear market is still generally more liquid than 2 bear markets ago, right? So if you look at kind of a 5+ year time horizon, the market is getting more liquid over time. It's certainly more liquid than its peers. What's remarkable about Bitcoin is it is a non-credit based fast bearer asset, and the world is slowly realizing it and testing it and saying, well, what if we try to forcibly increase the block size? Or what if we try to forcibly pass a hard fork or a soft fork? Or what if this bug's introduced or things like that? It's slowly over time going through different tests and meeting new levels of liquidity.